super excited to be joined today by Ryan Lee and Mo Sparks from the Direxion team, as well as, of course, my co-host here, Evan, aka Stock Market News. Let's get right into it, y'all. There is a ton happening, and you're seeing massive moves in the market. I mean, Iron up 20% today, Amazon up several percent. Ryan, let me start it off with you talking about everything that OpenAI is doing here, which is really just stimulating the market and continuing to make these mega cap names have incredible gains.
Yeah, no, thank you guys for having us again. It's a pleasure. Looking forward to the conversation today. Yeah, it's really hard to talk about the market in its current state without looking at OpenAI and really just the broader AI trade. Mo fittingly behind him has the picks and shovels. We'll get into semiconductors a little bit later as well. But, starting off with Amazon, some of the other hyperscalers, going through this earnings season, you've really seen some pretty incredible numbers on the CapEx side, and the market's digesting it rather well. Obviously, Meta had a bit of a miss. There was the one-time tax treatment as a result of the big, beautiful bill. So there is a bit of an understanding in the market that the core business needs to remain the core business and the CapEx is fine. And you look at, the deal with OpenAI and Amazon, everything OpenAI touches right now appears to be a bullish tailwind for anybody they're partnering with. We got the rumor last week about a potential IPO in the not too distant future. Certainly something to keep an eye on. I would have to imagine that Microsoft's 27% stake in that will play a factor. If they want a liquidity event, really the only way for them to do so is to tap public markets. So just a lot going on in the space. It's an exciting time to be a trader and investor. And we're excited to have some of this conversation today.
100%. Mo, what do you think when you see this?
Yeah, well, first off, obviously, thanks again for having us. I think Ryan summed it up very nicely. There's no question we're in an extremely interesting time in the markets, and the hyperscalers and AI is driving all of it. Seemingly there's not a day that doesn't go by where OpenAI or someone else across that subset doesn't release something that moves the market and provides really an opportunity if you're an active trader to express a view on one side or the next, right? And that is our business, is finding ways in which we can help active traders express the views that they have. And so, very clearly, we're here to talk a little bit about, one of the new products that we released, a suite of products called the Titans, which naturally you can't play OpenAI off of, but I would argue increasingly, right, in today's market with the tie-up between private and public, there's lots of interconnection between these companies. Ryan already highlighted Microsoft is the most clear in terms of that, but there is a lot here. Can't miss the weekend news, right, of interview, podcast, Microsoft and Sam, and in reference to the revenue generation of the business and OpenAI and kind of how that.
What an interesting answer he had.
So.
Yeah, well, yeah, Evan, do you want to touch on that real quick, and then I have a question for Mo?
Yeah, no, it was just a crazy weekend, and we're really lucky to be joined by Mo and Ryan. I appreciate you guys for hanging out with us here. Yeah, there was just so much news going on this weekend. I put it on the screen there. There was a story this morning between Amazon and OpenAI, so it's Amazon's turn to come in and get their deal with OpenAI. But there was a bunch of stuff from over the weekend. I actually got the chance to go to NVIDIA's GTC event last week. So I got to see Jensen talk live, and obviously NVIDIA is a big part of the Titan complex, we'll call it. So that was going on, but Jensen was over in Korea, so there was a lot of videos coming out of him. There was stuff of him going on in his own places. And then there was an interview that Sam Altman, it looked like it was an interview between Brad and Sundar Pichai, and then Satya Nadella, and then he just kind of crashed in on it. And then Sam Altman was asked about their build out, how a company with $13 billion could kind of pay for $1.5 trillion of AI infrastructure build out, and it was said in a nicer way. This is coming from someone who actually is invested in the company and wants to see it succeed. The question from Brad would be much more of so that you can clear this up from the doubters, as opposed to trying to be a gotcha question. And Sam had a little bit of a sparky answer, saying basically, hey, if you want to sell your OpenAI shares, someone else will take them. He did say they're bringing in a lot more revenue than $13 billion right now. But Sam had a very interesting response when he was asked about if OpenAI will even be able to pay for all of this stuff. He seemed to think that it's so obvious that they will be able to. He seems to be fed up with his questions. But this was just a jam-packed weekend. We had, I'm excited to talk some more macro stuff too, because we had some geopolitical headlines going on. And it's also an interesting backdrop with the government shutdown still going on, which doesn't seem to impact markets too much, except for the lack of data that we seem to be not getting, that, you know, the further away it is, the less we can kind of just be like, hey, the data before was fine, and it's kind of signaling. So I don't know. It's just an interesting time, but we did get a good amount of news. We talked about Microsoft there. They signed another power deal. They had one with IREN, which is one of these smaller names that I know the market has been getting excited about and just watching around. So yeah, it's an interesting time. I did just kind of talk through there a little bit. One other thing that happened, we had the Berkshire earnings on Saturday, so that sprinkles in Buffett having a little bit more cash, and then ASML. I don't know. I don't think this was new, but I was a video that they're basically, their marketing team is fantastic. One of the videos that they go in and make about you know, how their chips actually, how their machines actually work to make the chips, crossed by my feed last night, and I posted it, and I was like, wow, that is pretty crazy. So a lot of these headlines shot me up.
Yeah, speaking on the chips, you know, Mo, you mentioned you guys have a lot of great products that people can use to trade these things that are happening, whether it's OpenAI, you know, Amazon, NVIDIA, of course, and you guys are very famous for the SOXL ETF, right? That's been around for a long time there. With these pieces. And because I do want to talk about that, and then of course this new suite of ETFs as well, I just want to read off a quick disclosure, actually, and that's going to allow us to be able to talk about some of the product specific pieces, because I want to start talking to you especially about TSXU right here as well. So let me just grab that real quick. I'll pull it up and we'll read that off, and then we can get into some of these items. While I'm pulling that up, actually, if you want to just talk for a second, Mo or Ryan, about some of the things that Evan just touched on, I can grab that, and we can go into additional items here.
Yeah. Ryan, any comments you would share back? I mean, you've obviously done a lot recently. It kind of covered what's happening across earnings in big tech. You hit some of it on your open, but anything specific you would even highlight?
Yeah, I mean, I would actually kind of almost even zoom back out, just like some of the big stuff in the macro landscape outside of tech, outside of semis. You know, look, we got the rate cut we expected last week. I think that was all but a certainty. The market really would have freaked out a little bit if we didn't see that happen, I would imagine. But what was interesting, and to Evan's point, you know, we haven't seen the impacts of the shutdown really anywhere except for in Powell's commentary. I mean, time and time again, he stated that the lack of data makes December's cut less certain. And so that lack of certainty is probably going to be a pretty interesting catalyst as we head into year end here. Outside of that, I mean, you know, really who knows when that'll get resolved, but that's one thing to keep an eye on. The other, of course, was Trump's Asia tour, for lack of a better way of putting it. He really was out there seeming to try to, you know, assuage our bigger allies over in the region that, hey, we are still here for you. We are still this partner, broadly speaking. And the meeting with Xi net seemed very positive. Obviously, I think it goes without saying in today's day and age that on both sides of that conversation, who knows what is really the reality. But the headlines were positive. The market received them well. So I'd say those are two other things like outside of the world of big tech that I've got my eye on going into year end here.
Perfect. All right. With that being said, real quick, compliance voiceover here. An investor should carefully consider a fund's investment objectives, risk charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about the Direxion shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit the website at Direxion.com. A fund's prospectus and summary prospectus should be read carefully before investing. ALPS Distributors, Inc. With that being said, Mo, let's talk about this new suite of ETFs. So we've talked a little bit about them, these Titan ETFs, and some of these have really come out on fire. We were talking a few minutes before we started the live stream here about TSXU specifically, which I think is in a similar bucket to SOXL, but clearly has proven to be more focused, right? And that focus has worked out incredibly well in this market. This product was launched 1 month ago and is already up 63.69%. As of today, it's already up 1% today as well. Clearly, it's showing it can really move here, and that top bucket of companies, and I think that this was the goal, right, for the Titan ETFs, was to say, hey, these large cap top bucket companies are clearly experiencing a revolution here with this AI movement. Let's focus in on them and then leverage that up and create an amazing tool here for traders and investors, you know, maybe want to play the short term of these trends. Can you talk to us a little bit about the mindset going into these, how people should be utilizing them, the makeup of them, and then we can dive a little deeper?
Yeah, no, I think you said nicely in kind of your introduction to the Titan suite. I mean, I think here at Direxion, we're obviously very interested in continuing to create products and solutions that can serve tactical traders and investors abroad. Tactical trading is obviously what we're more so talking about here today. And so with the Titans, we were really trying to find a new entry point for tactical traders. And so traditionally, right, you think about Direxion, you think about baskets or broadly diversified indices that we provide traders to be able to move off of, say, the S&P 500, or you noted obviously in semiconductors is our example here, and something like SOXL or SOXS. And then more recently, in the last 3 years, we introduced a series of single stock, concentrated, levered and inverse products, and you've seen an immense amount of growth in that portfolio. We've expanded that out to 26 different pairs that kind of exist off of single names, from Tesla with TSLI to TSLL to we have a lot of different tickers, and naturally sometimes they slip off the tongue the wrong way, down into the semiconductors. NVIDIA obviously is a key component piece as well. But as we think about the Titans, what we saw was, let's provide a way to allow tactical traders to get exposure to the names that are really driving index returns. And so, let's just look at the S&P 500, and I'm looking over here to just kind of quote the most recent data. The top 5 in the S&P 5 are just about 30% of the total index. That's about double what it was in 2015. And so, the largest names, the proverbial, as we call them, obviously Titans, are truly leading industry, and they're leading market returns. And so, look at NVIDIA. We all know it just hit 5 trillion, and quite remarkable in terms of how quickly that occurred. And it's responsible for 20%, of the S&P 500, 17% gain so far this year. And so, as we took that step backwards, what we saw is, let's create solutions that target those names. And so, in the first tranche of products, we have semiconductors, we have technology, we have biotech, and we have energy. And within each one, let's really focus on the top 5 by market cap within each of those sectors or industries. And then let's make it kind of easier and allow for a tactical trader to get more precision exposure. And so let's give equal weight to each of those 5 names. And so let's use semiconductors as my example, have 20% in each of the 5 names, and let's just rebalance that every quarter. And so let's make it something that is responding to market movements, but is not responding in a way in which it's imbalanced. And so I think that that's what we found with the Titans, and we're really excited about how they've done so far. We just hit over a month in terms of their time in market, and we're starting to see some of that interest. And so actually, when you launch anything new, particularly in this market where we increasingly have a lot of ETFs that tactical traders and end investors can choose from, sometimes it takes time for a product to season, and we're starting to see some of those things. We saw some activity on Friday across the suite, in particular technology and semiconductors, that we view as very, very positive, and longer term a good sign that these are products that tactical traders are desiring.
Yeah, definitely makes sense. Sorry, getting a little feedback through somebody's mic. Not sure which one, but Ryan, I want to turn it over to you to hear your thoughts as well here.
Yeah, no, I mean, Mo hit on really just about everything as far as our motivation for launching these Titan products. The one other stat that I came across last night that I can't help myself but share, just talking about market concentration, NVIDIA is now bigger than both the utilities sector and the consumer discretionary sector by market cap. And it's unbelievable how big and how fast they've grown. Broadly speaking, though, like kind of as I had teased out in the beginning with the joke about Mo's picks and shovels behind him, you look at semis, and that's really what it is right now, right? And everyone kind of sees that as the trade. In the gold rush, obviously, if you were selling picks and shovels, you were the one who was making the most money. But I think sometimes we kind of look at that saying as a little too surface level, and kind of got to dive a bit deeper, right? If you think about it, all that is, like selling picks and shovels, is providing people with the tools that they need to achieve the outcome that they want. And now with this magnificent spending on AI CapEx, everybody's buying these semiconductors. And so if you look at the leaders, naturally they're the ones seeing an outsized portion of this CapEx spend. And so with the semiconductor, Titan product, you're targeting those top 5 names who are the ones with the partnerships with OpenAI, with Microsoft, with AWS. And so it allows for you to kind of play that AI trade a little bit less directly, but really just kind of filtering out the noise. You're just trading those top names. And that goes on both sides. We have the fund that's 2x long, TSXU, and the fund that's negative 2x short, TSXD. And so if you're in that camp of, wow, this has gotten awfully frothy awfully quickly, we do offer the bear side of this trade as well. And so again, kind of the most big picture thought, really how we view everything product driven over here at Direxion. We want to give traders the tactical tools that they can use to make trades that they see fit in the current market. And so I think on these in particular, it's important to give both sides, but naturally, given the performance number you had stated, Gav, the long end of the trade has seen a little bit more love so far.
One thing that I feel like I've seen less of recently, but I was seeing a lot of earlier in the year, was this discussion about concern that the large caps had become such a massive portion of the S&P 500. It's the largest percentage by concentration I believe we've ever seen. And people saying, hey, could we see a redistribution of the wealth per se, right? Where investors decide, hey, maybe there's not such outperforming returns to be found here. And of course, that hasn't been true recently with NVIDIA and even some of these others. Apple and Amazon both push all-time highs, and Google as well within the last week. Do you guys have any thoughts around that as to where, seeing money shift, or any concerns around concentration or pieces like that?
I think from my point of view, I can start, and then Ryan obviously jump in. I don't think there's anything directed. I mean, we all see the numbers. I quoted some myself in terms of what concentration looks like in the S&P 500 as our example, and clearly, reaching all-time highs and peaks. We have to go back to the 20s to see something that's comparable. But I think that being said, it's very clear at this point in time, they're the ones that are leading the market, and the capex is there, the balance sheets are quite strong. You can have a view in terms of how long that may last, and does this capex spending across AI, is it circular in nature, and does it result in some level of a bubble? That's not really for the two of us to have the true opinion on, as much as we are out there saying we see both sides and there could be an argument. And then because of that, I think there's a reason why you offer up products that can support either side of the market. So I think that's the fun thing. If you're a tactical trader, I'm sure a lot of people that are listening to this, you have a view, right? You have an opinion at this very moment, and that opinion may change tomorrow, and it may change the day after that. And so that's what our products are created for, is they offer that daily reset in terms of the exposure to allow you to hit that target, whether it's 2x, it's 3x in either side, or even if you're hedging something, as you've built up a position, right, and going 1x. And so there's a lot of different opportunities that we can provide, and that's what we're most interested in. Yeah, we want to have an opinion on where we kind of see the markets broadly, and be able to share that with others, but we really are interested in what others are saying and how our clients are using our products. And I think what I would share there, and Ryan can give probably a little bit of additional color on this, is we're very clearly seeing continued interest in the large names. And so we're entering into an earnings cycle. We're kind of midway through it. We saw it start with financials. We saw increased activity in our products FAS that was focused on financials. FAS is the ticker there. And so leading into, we saw a lot of activity. And then what have we seen now here on tech? I mean, Meta is a very interesting example. And I don't know, Ryan, if you just want to share just a bit of context around that name and kind of some of the activity that we saw, because I think it's very emblematic of everything we're seeing in the market in your question.
Yeah, 100%. And to your point with Meta, obviously we saw, really, of the Mag 7 names, the only one that's seen a major bearish move as a result of earnings. Yeah, everybody else was at worst mixed. But as a result of that, we do have a very large franchise of single stock ETFs offering both 2x bull funds and negative 1x bear, which is more of those kind of hedging tools, as Mo alluded to. And when you see a downside move like 10%, like we saw in Meta last week, we really see tactical traders reinvigorously get back into these names. If you look at our product METU, or 2x Meta fund, it traded over $1.2 billion the day following Meta's earnings last week. Majority of that activity appeared to be buying. And what was that driven by? But a 20% down move in the fund. So people clearly thought that this, quick to the name is not something that may be sticky. They thought this is a name that will bounce back. As I mentioned earlier, the one-time tax treatment with the big, beautiful bill, the AI capex being something that they'll reap dividends from in the future. Typically we will see tactical traders jump back into these names in force. And, again, to go back to your kind of original question here, Gav, yeah, there's a lot of concentration in the market, but I think any parallel towards that .com bubble is a little bit iffy, in my opinion, just given these are real businesses producing real cash flow. Again, with Meta, yes, the AI capex number is pretty crazy. You're seeing 9-figure data centers, 7-figure comp packages like are there nothing. Reality is, they still generate an enormous amount of free cash flow through their advertising business. So it's interesting to see how these kind of two businesses are running concurrently. And again, just based on how traders reacted to the earnings, I would say that our audience at least tended to be a little bit more bullish.
Yeah, I agree. I think that you guys also concentrated in on the right sectors here. So for those who haven't taken a look, biotech, energy, and then semis and daily technology. For those who haven't really looked into it, obviously there's significant outperformance from the semiconductor one. Daily technology, I think people were looking at and saying, hey, a little bit of similarities there. Ryan, can you just break down for people kind of the main differences between the semiconductor and the daily technology bull ETFs?
Yeah, absolutely. So if you look at those two funds with technology first, we look at the technology select sector index. We take those top 5 holdings and have them equal weighted. They'll get rebalanced and reconstituted quarterly. So if we were to see a name like, let's just say Palantir move in and Oracle move out, that would be done at the end of the year now. And so it'll be done each quarter. Again, just making sure that this always remains those titans of technology who'll be in there. On the semi side, we look at the ICE Semiconductor Index. Same index that you would use in SOXL, our flagship fund over here. Again, we're just making sure we're constantly capturing those top 5 names across those 2 sectors. Now, naturally, tech and semis are going to have a little bit of overlap in today's day and age. I mean, as we've kind of talked about, it's hard to not trade tech without trading some semis. And so you'd see actually NVIDIA and Broadcom are holdings in both of the 2 funds. We view that as a feature, not a bug. Again, if you're trading tech and you're not trading NVIDIA, feels like a little bit of a miss in my opinion. Again, either direction, long or short. And same goes for Broadcom. I mean, these are the companies that are driving this theoretical next technological evolution into AI. And so the overlap between the 2 is tactical. And you look at the other names in tech, be it Apple, Microsoft, Oracle, each of them are playing AI in their own way. Apple's received some criticism for kind of being the laggard of the Mag 7 in the AI trade, but reality is their hardware infrastructure, especially in the US, is a real moat that I think people need to kind of take into account there. You look at Microsoft, right, we've hit on that enough with the OpenAI partnership, and then Oracle as well. So it really is just an exciting way to trade either long or short this broader AI trade through the lens of technology on the whole.
Yeah, it's super interesting. Appreciate you outlining the overlap there as well. It's about 40%. Or exactly 40% of each fund. And then the big differences being that inside the semi one, you've had AMD capturing that nice move, Taiwan Semi, and then ASML.
We actually have AMD earnings coming up tomorrow. So that should be a fun one incoming. I'm sure. Listen, I can't guarantee any direction. I guess I can't guarantee volatility as well, but I feel like volatility is going to happen on this one.
For sure.
Unless the options sellers just win and it sits even, then we all just go home. But no, I'm hoping for a good move on AMD earnings tomorrow. I apologize for interrupting, but I was just looking at the calendar, and that should be a fun big one tomorrow.
Yeah. And Palantir earnings today, right? Which could put it in position to be moved up. When you talk about the rebalance, so that would be basically on the last day of the quarter, whatever the top 5 were?
Yeah. So from a rebalance perspective, it happens every quarter. And so going into quarter end, there's a lock-in period that it takes place. And so recognizing just operationally how a fund actually has to function, right? That tends to be moved forward about a week, 10 days. And then, from that day forward, it locks on what those 5 names are. You come back to an equal weight of 20%. And then it's clearly going to drift between the quarter, depending on performance of any given name, up and down. So I think it's a really nice feature to have within the strategy is you get that reoccurring reset. And what's notable too is in certain sectors, or you may see, or even industries, that a lot of names may come in and out, right? I mean, as we think about tech is an example, less likely to see a lot of movement. Energy, less likely to see a lot of movement in today's environment. Within semis, given the moves we're seeing across even the largest semiconductor names, there is potential for movement. And then the same is very true across biotech. And Ryan can speak a little bit more to some of the intricacies of what we're seeing across that industry. But you look at that industry and it's not as concentrated at the top with a series of winners, right? It's an industry that tends to be defined by what happens with the latest release of an earnings report, of a drug. Earnings is on my mind as well. And so, that tends to define really the performance of those names. And as such, they tend to rocket up and rocket back down. And so very, very interesting.
Mo, I know you lead the product development side. I'm just curious, when you were coming up with these, what was the inspiration initially, or kind of if you could just walk us through the thought process?
Yeah, and so I think that I touched on it a bit. As we think about it, I think it was just this perfect placement of there's almost like this funnel, and you can start really broad in terms of the exposures that you can achieve. And then we went down to the most concentrated versions with single stocks, and we saw that tactical traders were looking for tools to allow them to make a move on any given day. Earnings season is the season where we clearly see it the most, but intra-period there's news cycles that drive both company performance and then obviously practical trading behavior. And so that was a really interesting, I think, learning for us. And so we then thought, well, how can we play off of that same concept and find an appropriate middle ground? And that's really what Titans are. Is it's supposed to be that new entry point. And I use this phrase, be bold, trade the Titans. In some ways, it's not that bold, and that these are really the companies that are defining the performance today of a sector or an industry, but you're targeted in terms of what you're trying to achieve. And I think that today's traders like that. They like times in which they can have broader exposure to, say, the market, like the S&P 500, or on the Treasury curve, the 30-year plus Treasury curve. But they also like things that offer greater concentration. And so that's what really this was. And that was that kind of, proverbial light bulb moment for us, was to see that, recognize it, and then create the solution, and go out and tell the story and see how tactical traders respond.
How do you get feedback from different trading groups and different trading areas? I'm just curious what that process looks like.
Yeah. So, we have increasingly interactions like this, and, some in which obviously there's greater interaction from those that are listening that we can use as a sounding board. Not surprisingly, in today's environment, we're all overwhelmed with data and information. And so, we get a lot of information on behaviors across trading platforms that we can integrate into how we think about what we're prioritizing, because that's really it, particularly in the single stock market of ours. I think about it as, I have a lot of different things off the shelf, and I'm trying to figure out which ones we bring off the shelf and to give them the greatest chance for success. And so, we're trying to be increasingly focused on that point. I think legacy is a bit more of, you shoot some spaghetti and you see what hits, which is always part of operating a business. But I think you can get more refined in terms of that thinking. And admittedly, even where we started our conversation, obviously on AI tools are helping to make that process even more efficient, and allowing us to move faster in terms of creating products and bringing it to market. I mean, you look at this year, and we'll launch over 30 ETFs this year. That's a big number, and you look at what's happened across our broader industry, and we've had a pretty healthy clip of ETF launches, and so a lot of that is being enabled by an ability to just be much more efficient.
I know that. Oh yeah, sorry, go for it.
I actually have seen an article this morning, and then I've seen a bunch of articles about this recently, about mutual funds and all these mutual fund providers starting to launch ETFs. I don't think we'll see how many people end up caring about this. Maybe there's just a big drop off in people, but I'm just curious, what are the advantages of an ETF versus a mutual fund, and like, why are these mutual fund shops switching over to ETFs pretty aggressively? A little late, but pretty aggressively.
Ryan, put your hat on and tell your story.
Yeah, more than happy to. I've spent my whole career only working in the world of ETFs, so if I don't have a good answer to this question, I'd really be in some trouble. Most relevant to this audience, I would say, is the intraday liquidity, right? Think about the fact that between 9:30 and 4 in real time, you can put on and take off positions via the ETF wrapper, where you just simply can't in the mutual fund. I mean, there's no shortage of geopolitical drivers, news headlines that drive trading intraday, where if you buy a mutual fund, you're going to get NAV at 415, and that's all you're going to get. You can't buy low and sell high intraday. You can't do the reverse. You really are just bound to the confines of getting execution after the close. Now, big picture too, and like less relevant to a lot of our tactical trading vehicles kind of ETFs. If you look at some of the more buy and hold ETFs out there, such as our QQQE, an equal weighted NASDAQ 100 fund, there's tax efficiencies in the ETF wrapper as well. There's lower costs. It really is meant to be, I hate the saying, but a better mousetrap. And it's meant for investors and traders alike. But for your guys' audience, I think the biggest one is easily intraday liquidity.
Yeah, I couldn't agree more. Liquidity is driving a lot of what we see in ETFs from a growth perspective. I also think I view it as I avoid the mousetrap term by just saying technology, because I think it is very, very relevant, right? It is a better technology. Music very clearly has evolved in terms of how we consume it. The same has happened with your financial products. The wrappers in which the exposures are delivered to you have changed, and they'll continue to change. But ETFs are very clearly here and now, and there's a lot of things going for them, and they function very nicely in this cellular device that we're often either listening to something on, or obviously placing a trade on, and just generally having in our pocket.
Love it. I know we've been running for a little bit over 30 minutes here. Just a couple more quick questions and we can wrap up. You both have a very strong background in the ETF world. Both also worked at the New York Stock Exchange, and we're both at the event this past week for the Exchange's ETF conference. I'm curious, as you kind of talk to other ETF managers and as well as people at the exchange, what retail should be looking forward to when it comes to ETFs throughout the latter portion of this year and into next year? It seems like it is a rapidly changing landscape. There is a lot of favorableness for it. We have more ETFs and stocks now. So I would just love to hear kind of your thoughts as people who have been in this industry for a long, long time.
Yeah, Ryan, go ahead and start.
Yeah, I mean, look, it's an incredibly exciting time in the world of ETFs, although I think I probably would have now said that for about 8 years in a row. So it's ever evolving and ever changing. But look, there's so much out there. As Mo mentioned, we're going to be north of 30 ETFs launched just from our firm alone this year. And reality is, I would say, to Evan's point too, the attention you're getting from all asset managers, whether it's ETF natives like us here at Direxion or legacy mutual fund managers, everybody's bringing their best and their brightest ideas into the ETF wrapper now. And so just that evolving landscape where if you want to put on a certain trade, you could do it via the ETF, I think is exciting. Again, our products are trading tools. You look at some big legacy asset managers who have more buy and hold-esque products, and they're all bringing their best strategies out there too, whether it's equities, fixed income, derivatives. It's just an ever-evolving landscape where I'd say it's very, very competitive in the best way possible, because all that competition does is bring the best and the brightest ideas out there for traders and investors who are the end clients.
Yeah, and I think, to build a little bit off of what Ryan stated, because I obviously tend to agree with everything there, is maybe two things. One, I think that across the industry, there's just a continued commitment to education. And I think that, that education is very clearly evolved. You asked Gavin an appropriate question, just defining the differences between mutual fund and ETF and how one thinks about it. For a long period of time, that was the most important thing that we could do as an industry is tell that story of what is the wrapper, how does it function, why even trust it, right? We're now north of 35 years almost of exposure in terms of coming through ETFs here in the US and started in Canada. But what hasn't changed is a need to continue to ensure that end traders or investors are understanding what they're buying and consuming every day. And so, I think our industry has been very good at that. It's something that as a firm at Direxion, we take a lot of pride in. Personally, it's something I take a lot of pride in. If you ever receive an email from me, you'd see it says CETF behind that. That's Certified ETF Advisor. Ryan shares it as well. It's really something that I think all end traders or investors should consider, is just continuing to ensure that they understand what they're buying, right? And that's one way in which you can do it. For us specifically at our firm, we've leaned in heavily because we created a new product concept, right? We brought a very complex product into a simple wrapper that allows you to execute a trade on, 2, 3x or negative 1x of an individual security to a basket of 5 securities to a basket of 500. And in doing so, you need to understand how you can go about that. What are the potential risks? And so, we have a Direxion University at Direxion.com that can talk you through what is a daily reset? What are the impacts of compounding? What is decay? These really important things that you as traders should understand, and as a broader investor, about how a product functions. And so I think the industry will continue to focus on that angle of education. Clearly, digital assets coming into the ETF wrapper as well. There's been a lot that we collectively are learning. I think that there's very traditionally a set of digital native individuals that were used to their digital wallets and how things functioned in that. Now they're coming into ETFs and they're learning some of those basic things for the first time, and what the benefits can be and what the differences are versus what historically they've had in terms of their exposures. And as an industry, we're learning more and more about, each of the individual coins and some of the technology behind making a coin happen, and what the blockchain is and the practical implications and the benefits it may provide, all those sorts of things. And so, I look at that as an area where there's a lot of continued opportunity for us as an industry to get better. And then I think, Ryan kind of spotlighted it. I think this is a really fun time to be in our shoes and to just be a participant in ETFs. And so if I'm a trader, I'm going to have more tools than ever to choose from to allow me to express my views. I think what's important is you go through that process of ultimately selecting whomever or whatever the product is that you're looking for, is obviously starting first with your exposure and understanding what that exposure is, how it's achieved. I think one of the things that is, maybe a little bit underappreciated in a traditional sense is how one goes about that process. And so I think we're a bit differentiated at Direxion in terms of how we achieve the leverage within our products. And we rely on a number of counterparties, about 10 that are the largest global banks in the world. And we're very thoughtful in terms of how we're structuring those agreements, doing it in a way that is really unparalleled across our competition. And also, we're very mindful towards risk. And so very thoughtful around how we've structured both our contracts and the exposures that actually are getting achieved from an end investor standpoint or trader standpoint, which I think is unique. Then the other thing is who's there to listen. And so, increasingly you ask that question of how we think about, products that are coming out the door. Like, we want to make ourselves more available such that we can hear traders' ideas and get their perspectives and bring that into our process, and also look to build a community. Like this group is kind of like our people, as we'd say. And we want to make sure that we're supporting you and that we're giving you what you need. And so if there's other things that we should be doing, whether it's thought leadership or it's products, we're doing that. And so, don't be afraid would be my open plug here to reach out to either one of us. You can find us on LinkedIn. You can find us on X, at least you can find me on X, and happy to have a conversation, just better understand where you're at with things. So took that a bit further than I think your question, but I think it was an important kind of thing to plug in.
No, that was great. And the point of tokenization, I didn't realize how involved the ETF industry was with tokenization until that panel that Grayscale and Bitwise were on that I watched at the conference, and they were saying, like, this is coming, this is happening, this is the movement. So it seems like that's really incoming. So I'm glad to hear that you're paying attention to it as well.
Yeah, of course. I mean, I think that, change always takes time, but change is inevitable. And so it's where you place yourself on that curve. And we're ensuring that we're staying informed and educated and being a voice in the places that we need to at this point in time. And then, coming quickly behind in other areas where it makes sense.
For sure. Great points there. Ryan, any other thoughts from yourself that you want to share today?
No, I mean, look, Mo hits on all of that really well. I mean, just to kind of reiterate, I'm completely aligned with him on the education part of this. I mean, really, nothing works without proper education. If traders don't know what they're getting into, if they don't understand the concept of daily leverage, these products won't succeed. We want our traders to be as informed as humanly possible. There's great resources, as Mo plugged, out there on our website. Would highly encourage everybody to check those out. And I mean, look, like Mo said, with whether it's tokenization, new types of leverage and inverse ETFs, new things in the world of active fixed income, there's no complacency in ETF world. And I think that's one of the most fun parts of this. Again, tokenization is a great example of something that's so emblematic of our world where, yeah, the success has been resounding. Inflows into the broader world of ETFs have been nothing but a graph of up and to the right. And even in spite of that fact, everyone continues to try to push the envelope and create something better and better and better. So I'd say that incremental progress, the constant lack of complacency, really is what's been fun about this world and what I think will make these next few years even more fun.
Beautiful. Yeah, I'll show these one more time. Evan, do you have any final comments that you want to share on this one?
No. So you got them up on the screen. I've said this a couple times. I think that when I think about traders and stuff like that, obviously TSXU and TTXU, the semiconductor and the bull one, the long ones, have been more popular so far. I think people are going to start to coalesce around the biotech one, TBXU. I know there was an energy headline during this, so maybe it's the energy one. But yeah, no, a lot of interesting stuff here. I think these are going to become popular. I've been watching them pretty closely. I do have a question. You guys have a lot of long products, a good amount of shorter products as well. I'd be curious on what you guys see around how much people use these more 2x short products. Like when there's a big crash, I would think, or even when we're down 2-3%, I would think it's people looking for the longs to or which one to bottom fish as opposed to looking for how to position themselves short. I'd be curious on what you guys have seen around having some 2x short products versus 2x long and how people position themselves in different pullbacks. Like I also could imagine a scenario that like, at that point of most pain around down 10-20% for the underlying, so a lot more for the leverage ones, maybe that's when the people kind of start to make that shift. But I would be curious what you guys have seen around the psychology of how much people use these products long versus short. And obviously in good times, they're going to use a lot more of the longs. But I'm also curious when we've seen pullbacks, both small and big, how they kind of switch over. I apologize for launching a whole other question here, God. Maybe we got a hard cut off. But that is something I'm curious in.
You're good.
Yeah, all good. Mo?
Yeah,
Or
Ryan did some really interesting kind of research on this point. I think my point is he kind of rebrings that into his brain is, generally what we tend to see is the bulls win. People, I think philosophically, we tend to have a lot more people that are optimistic than pessimistic, and that explains itself in terms of investing. I think that benefits all of us, right? If the market continues to go up, and so I think that's where the dollars always are, and then the behavior tends to be more of by the dip, as we highlighted with the example of Meta. But that being said, I think there are real use cases for bear-oriented strategies, particularly for the negative 1x products and singles from a hedging perspective, and what that can provide of taking some money off potentially the table, or some risk off the table for a trader. But Ryan actually did an interesting kind of analysis looking at bears in particular, and maybe you want to share some thoughts off of that.
Yeah, 100%. I mean, big picture, and to Mo's point, it's easier to be a bull for people. That you'll always see the optimism, especially when the market's been running the way that it has. So our bull lineup has been far larger than our bear lineup for a good period of time. In fact, the last time we saw our bears bigger than our bulls was back in the depths of COVID, right at the bottom of the market around 2020. That was the last time you saw bear assets larger than bull assets, at least for us as a firm. What I would say, generally speaking, and the Meta-METU example we used earlier is the perfect example for this. Much of the activity in our funds is what I'll call countercyclical. If you see stuff selling off, people will flock back into bulls. You see things ripping, you'll see people go into the bears. In fact, if you looked at our firm's fund flows for the year, our bears are actually bringing in more assets. Now, that's offset by the roaring bull market we're experiencing, but I think it does kind of show you how people view this. And if they think things are getting a little top heavy, great, that's what our bear funds are there for. If they think the reverse, the bull funds are there for that. And so I would say that's kind of the biggest thing. The only other thing I would have to add, and kind of the most point around hedging, if you look at our negative 1x single stocks for the bears, they're very commonly used into earnings. Now, sure, you could use those as a way of taking a contrarian position and just think the stock will go down, or you could be sitting on a long-term position, such as NVIDIA, have long-term gains in there, might not necessarily feel optimistic going into earnings, but you don't want to realize a taxable event by selling your position. You can hedge yourself with our negative 1x NVIDIA fund. And so I think it's another interesting way to use it as a tactical trading tool. Again, just a good way to hedge yourself. You always want to protect against some of that downside risk, but unfortunately, you also don't necessarily want to trigger a gain if you've been holding NVIDIA these past 5 years. It's a hefty tax bill you'll be eating. So they're just another arrow in your quiver, so to speak.
Perfect. Great explanation. Evan, any other thoughts?
No, I appreciate you.
All right. Mo, I'll give you then final word here. Anything else you want to share before we close this one out?
No, I mean, I just, again, thank you. Appreciate the time. Obviously, everyone joining, listening in, is it plugged. Obviously, you can always learn more about our products at Direxion.com. Very clearly, you can learn more about the Titans on Direxion.com. And then don't hesitate to reach out to us. We love to, interact and to better understand some of your feedback, ways in which we can, positioning product as well as just the firm to allow you to find more success. So, Gav, Evan, thank you very much.
Yeah, I love it. Great to hear that there's that open welcomeness for feedback. So if you are a trader that's watching this, might as well go reach out, connect with them. Those tickers, if you are wondering about them one more time, TBXU, TEXU, TSXU, TSXD, TTXU, and TTXD. You can find them all on their website with full breakdowns of the holdings, performance, everything along those lines. Obviously, we honed in a little bit on the semis because those have worked super well. I believe that it has most AUM as well of the group, and it's just had an incredible move. So if you were looking at this, move that we're having with OpenAI and all these others, and you're wondering, like Mo mentioned in the beginning, right? Hey, how can we get exposure to something like this or play it? These might be something that you want to go do your due diligence into, especially as a trader, right? Potentially trading off of catalyst news, earnings, things like that.